Okay, recap for Wednesday, the 17th of June, 2026. Today, as you know, is FOMC, right? And most people just don't trade the morning session for FOMC, which I'm with them people, right? I don't like the morning session of FOMC. If you want to trade it, you guys can have it. That's all you. I'm good. I'd rather trade the PM, which people don't even like trading the PM FOMC. I don't know why. It's normally easy, right? Once you understand what FOMC does, you can kind of see what it's trying to do, right? More times than not. And I've developed a few models for FOMC that now I barely miss it. And this is one of the new. I like learning new stuff, right? Like this is one of the new FOMC tabs, right? I haven't seen this before, but I figured it out at the moment, and then just got in sync, got my trade. GG's, go next, right? Um, yeah, I guess let's start the winning streak again. I don't know. I don't even know if I could count yesterday's loss because that would just me just just lost. I don't know what was wrong with me yesterday. If I'm probably didn't sleep. Anyway, okay, recap. So, what do we expect? What was going on, right? Monday opened up crazy, right? Um, New weekly opening gap, not visited, nothing, right? I'm bearish on the market overall. I don't like this extra rally up, right? It's making this suspect, and it puts me back into the 50-50 range, right? I'm still bearish, and I hope it stays bearish, but once this volume imbalance is done with the closing candle below, right, then it kind of needs a volume, a bullish candle above it as well. So I don't know if that bullish candle is going to be the reason we're going to go all the way back all-time highs again. Check YM. Interesting. So YM does make an SMT. Yes? Yes, does not. Anyway, so I'm not too sure, right? I'm not too sure. I can't give you a daily bias right now, right? This would have been how it should have went down, and we should have actually just start continuing lower. But manipulation, war news, whatever, and they're just doing the whole shebang. So it's annoying, and I can't really tell until let's say we clear this breaker for me, right? Until we clear this, right, midpoint of it, roughly, I'm looking at. If you want the best example, I know it's far. It's just this volume imbalance for me to get back in sync into taking out these, right? So let's just hope this is just some sort of manipulation because that's not how the market. And then we can use this back as a SIBI, right? Clearly failing as an inversion, but it's not an inversion now. It doesn't have to be an inversion now because we did not, like I said, down candle, up candle on this volume imbalance for it to be done, right? Let's just say that's the word. Anyway, so if we understand that how we're gravitating, right, especially because it's Tuesday, laid out the stage, we are gravitating down to our new weekly opening gap. That's our draw on liquidity. So we should be bearish, right? I just want to double check this actually, like the quadrants. Where did we hit on New York, London? Interesting. Right, so the market is already weak, right? But that doesn't mean FOMC is the one that's gonna take us down there, right? So what's FOMC? What should you look into FOMC, right? We can see that we have stacked relative equal highs, right? In terms of sessions, we have our buy side from London, the AM, and at that current moment, the PM high, right? Now this is the PM high. By the way, because of how the daily thing, I do expect us to come back to these maybe this week or maybe tomorrow. I don't know. I'm not too sure. I think tomorrow. These are suspect. Anyway, in terms of FOMC would seek the highest probability drawn liquidity. What does that mean, right? Well, if we don't have anything below, right? As in, if it's not long relative equal highs, relative equal lows, whatever, it can cause damage, right? So it can go both ways. you want to go to the way that is after the second, right? Because the proper FOMC is 2 stages. One is at 2, right? There. And one is at 2:30. Like that's when the announcement or whatever starts happening. But just watch it from 2:30 basically. That's what I do. And then I just see what has been taken and then what's left. Right? So what's the manipulation and then what's the distribution, if you want to think about it that way. Think about the first half an hour is just accumulation. And then after that you got probably 10 minutes or so of manipulation, right? From 2:30 to like 2:45, let's say 15 minutes of manipulation, and the rest is distribution. So when I was looking at this, I was like, okay, we went into our new weekly opening gap. We didn't even hit the upper quadrant. That is just insignificant to me, right? That doesn't mean anything about filling the new weekly opening gap. So I was like, okay, I think, right? That's my the way that we set up these highs. I think post 2:30, what we do is go down, right? Get these early longs out the way, and then manipulate against them, and then distribute to the relative equal highs. I completely forgot that this is a daily volume imbalance, so it would make sense to have a candle close through it, right? So that's why the probability was on the other side. Anyway, when the market, it doesn't matter what you think, right? It's just you need to see what the manipulation does. Once we have our manipulation to the first liquidity, right? We don't take them all. And I'm like, that's interesting, right? Because I'm here, I'm waiting for the entry, right? Because like I need to see something go against us first, right? This is normally the manipulation window, so I can't enter. There's no way. So when it hits that target, I'm like, wait, is this the manipulation? Right? So I just look real quick. What's ES doing? ES has not taken a single high, and it's been stacking them all. And it goes all the way up, right? And doesn't take it. So I'm like, wait, that's an SMT there. That might be the manipulation. So I was like, you know what? Time has reached, right? Like we have 45 is here. All right, we finished the manipulation time. So the time window for the manipulation is done. Now it's distribution. So I was like, hey, we took out buy side, I guess, and the rest is sell side our new weekly opening gap. And that makes more sense to fill it since we didn't go to it properly, right? So like, you know what? I'm gonna take this short. I'm gonna wait for this to act as an inversion fair value gap. We come down, nearly close below it. Watch the volume imbalance right here. So we technically close below the wick, but there's a mini volume imbalance, so watch that. Regardless, I don't care. I'm waiting for it to act as an inversion fair value gap. And what does that mean? Once we go below midpoint, nobodies are allowed above that. Boom, boom, we get out. I don't like how we get out too much. I mean, not that much really. I wanted us to close below the middle of this wick, right? This would have made sense for me for it to act as an inversion, but it would go to the midpoint. So I'm like, I'm cautious. I'm cautious. I can see it is acting as an inversion, but is it gonna still act as an inversion? We go up, we have this large wick and close right below. Boom. Yeah, that's confirmation. Entry, stop loss here. And I take it all the way down in this leg that was very fast, and it was 200 points or so. But I'm watching ESY because of these were the legs that I would expect it. I mean, at least the manipulation to go to, right? But it didn't. So there is a scenario where I think maybe we still leave the new weekly opening gap for tomorrow, but we come down, take these lows, and then come take out the highs, making sure shorts are cooked for sure because the new weekly opening gap is obvious, and then tomorrow we go for them. But we don't. So the safest bet for me was just take something off right here at the same candle. I took something off and then I just didn't really like it, so I closed the whole position. I waited for another confirmation. Once it goes below midpoint of this wick, I use that midpoint of the wick as an entry. It starts messing around and then I take it to one at the upper quadrant and one at the midpoint. And that's enough for me. So I guess a double trade, I normally don't do that, and I actually won't do that again. I don't think so because it was risky, right? Yes, it was risky, but like I would prefer it if I did it on another account or something like that. Like normally, FEMA rules, like if I win a trade on an account, right? That's it. It should be normally, that's it. It shouldn't be like on an account, try to get another one. But if it's too obvious, right? And this is not worth it, right? And I know it's probably 200 points or something like that, 160 or whatever. It's just not worth it in terms of the probabilities. The probabilities are way less here because we were SMT and we went up like this, and like this could have easily done what I said of just going all the way back up there. And then later tomorrow we come and close on nuclear. So I didn't like the second trade, but first trade following the rules, pretty nice, good TP, everything's Gucci, and then we come back to discount. That's why we have this, and so it was a heavy manipulation in the distribution, right? So I'm glad that I just got up. Yeah, that's the market recap. There isn't really much to FOMC days. They're pretty straightforward once you understand them, right? And just I prefer to let me have a quick look at New York because I had not seen anything about it, right? Let me just 9:30 we open. We have our initial liquidity here. There was initial liquidity there as well. We come sweep the high. You know what? It's there. It's garbage, right? Like, let's say I traded New York, right? I would have taken this candle right here, this one, this wick. I go straight into it because I know it'll deliver. I know this has to deliver after this. So that would have been, I guess, my trade, and it really would have been to here. It's 82 points. No, actually, that's cap. It'd be to this low. 93 points. So maybe I would have taken that. I can't be too sure, right? Like, but I know that's something I probably would have done. But he don't know. You know what I'm saying? He don't know. Anyway, that's the market recap. New York trade, that would have been your trade. You should have been out. If you were seeking the low here, then you're just greedy, right? Because again, it's an FOMC day. Any other day, I would have taken this trade all the way to previous daily low. But it's FOMC day. This is what you should expect, and the delivery will be on FOMC. That's all I need to say. And yeah, peace out.